Okay, everybody, here we go. It's me, Gregory Mannarino. Sunday, April 23rd, 2023. Let's just start off with this whole drag racing thing. So over the weekend, most of you know I was out drag racing. Well, what ended up happening here, I got one time trial in yesterday. The track was running behind about an hour and a half. Then someone oiled down the entire track. So I said, you know what? I just can't stay here anymore. I ended up leaving before the eliminations. You know what? Sometimes you eat the bear, sometimes the bear eats you. But the car ran very, very strong. My best run was a 1093 at 120 miles an hour. Not too bad. I will be back racing pretty soon. I know a lot of you were looking forward to hearing what happened or about the result. Anyway, that's it. With that said, people, let us move forward here. Now, let me start off with this. I don't want to join in any way, shape, or form the choir of stock market crash callers that seem to be crawling out of the woodwork. I mean, you know, they're perpetually, these people every week, every month. Oh, it's going to be now. It's going to be this time or that time or whatever it might be. And invariably, then they've been proven to be wrong. But if you recall, if you've been watching my videos over the past few weeks, I've been saying this market looks toppy. And the way this stock market has been trading as of late, I'm going to say it again. It looks to me like this market is about to take a hit. Now, again, I am not joining the choir of crash callers. I am saying that this market has gone higher and freaking higher and freaking higher in the face of continuing abysmal economic news. And you know how this works here. When the market hears that, or market participants hear that the economy is like cratering, the market assumes that the Fed's going to keep the foot to the floor and keep rates suppressed and keep the easy money pouring in, which is absolutely true. That's going to continue for a while. I don't think they're done. I've been explaining since the end of last year that they're not done. They're not done. They're going to keep pumping and pumping and pumping, and that's what they've been doing. There's no connection here. It blows my mind in the literal sense to look at where the economy is globally, and it continues to free fall, and where the global equity markets are. There's no connection at all. There used to be, okay? The markets used to be kind of really in lockstep with where the economy is, but prior to the big meltdown of 2008. And ever since that time, with easy money pouring in here, I mean, there's been this gap between where the market is and the economy is, and that gap here is getting wider and wider and wider and wider and wider. And all it's doing here is creating, incredible, twisted, off the Richter scale distortions between, the economy again and the market. But this is going to get real at one point. It's gonna get real at one point. Now, when? That's the question. Everyone asks when. Okay. You all know the answer to this. It depends on action in the debt market, which is the driver of this entire freak show. All right? Central banks, what are they doing as of late? What have we been seeing? An enormous effort to keep rates suppressed here. There's no market. It's not real. It's all fake when you have this kind of action going on here. And then on top of that, you got hundreds of billions of dollars that have been pumped into prop up this zombified freak show of a banking system, only so they can consolidate it. Again, look what they're doing here. They're integrating. You got to use the right word. That's the mainstream media. They're integrating. Can't be consolidating. It's integrating. And they're propping up the zombie smaller institutional banks so they can be absorbed into the bigger collective system, into the collective. I said that recently. That's the word we're going to use. They must do this, people. They have to consolidate the system, as you are well aware, to issue in their new central bank digital currency, period. There ain't no way out of it. I don't care what you're hearing out of the mainstream media, or even, YouTubers who are trying to push some kind of commodity-backed system. It ain't never going to happen, ever. Why? Because that would take away the power of central banks, and they will not allow it. Central banks are public enemy number one. Central banks are the most powerful organizations on the planet, bar none. You all know that they will never, ever allow a commodity-backed system. Period. Remember that chart I showed you of the dollar since 1913 in an absolute free fall? Well, let me let you in on a little bit of news here. That free fall is going to accelerate moving forward. People, what we're doing here, okay, is moving into an inflationary depression. An inflationary depression. I know there's people out here like Harry Dent and a bunch of others calling for a deflationary event. Well, you're going to be waiting for a really, really long time. Central banks are not going to allow it. Absolutely, what you will see is what we're seeing now, and that is they're going to hit people where it hurts. Okay, you're seeing housing prices fall. Yeah, that's part of the mechanism to instill a sense of hopelessness and helplessness into people as they're dealing with food inflation and food shortages, which are coming, all right? And of course, people are in their homes. They bought these houses a year or two or 3 ago, whatever, and now they're seeing the prices come down, and it's demoralizing to these people. So again, maybe you have an idea of how this works if you follow this blog here. People are they're being attacked from multiple directions here. Again, in an environment where they can't survive without borrowing and borrowing and borrowing more. What do we know is going on? Credit card debt, household debt, personal debt, consumer debt, out of control, getting much, much higher, record high, record high, record high. The purchasing power of the currency is evaporating. And I'm telling you, people, mark my words, this is going to get much, much worse. Meanwhile, you're going to see certain aspects of the market, let's say housing, for example, fall a little bit as they demoralize people and say, hey, you know what? My house, I'm down 100 grand. I'm down 150,000. And they look at their finances. Oh, my goodness, if I strip out what I owe as to what I actually own, I am deep in a hole. This is part of the mechanism here. Okay, it's a psyop. It's psychological warfare on the people as they're being exterminated, and people are surrendering. They are surrendering in droves. You and me. What do I always tell you? We're the resistance, and knowledge is power. You understand? So what are we doing? What are we doing? Understanding where this is going. Again, there's a lot of people, and I'm sure watching this video blog, oh, Greg is wrong. We're going to see massive deflation because the economy is free falling. Really? Oh, okay, let's see. So the economy is cratering, and these kind of people are expecting the prices to drop. How about this? Let's consider for a nanosecond, they shut down the entire world economy during COVID, okay? Prices didn't go down, did they? The market went higher and inflation went higher too. They can shut down the economy again completely, and inflation is going to go higher. Why? Because they're killing the currency. What have we discussed here in this blog since time immemorial? Central banks are in a race to the bottom, a race to the bottom, a race to the bottom. You understand? That's where we're at here. And they're going to suck the purchasing power out of their currency faster. They're not going to allow a deflationary event to occur. They are pushing us into an inflationary, they're going to say recession. I'm going to tell you we're already in recession. We're going into a depression, period. I'm going to tell you something else too. And I covered this months ago. You're going to see exactly what we're seeing now. More people losing their jobs. Corporate layoffs are going to get much, much greater moving forward here. It's part of the mechanism. And then, of course, you're going to get the propaganda. Oh, our economy is strong. We're doing fantastic. And this Fed president freak and another one after that one telling you I just don't see a recession. Kind of like how they didn't see transitory. They didn't see temporary with regard to inflation. Well, you and I, since day one, laughed. We knew this was nonsense. It was garbage. And we were going to see much higher inflation. And I'm telling you, people, mark my words, you haven't seen anything yet. But just touching back on this market real quick here, okay, for my Lions. I am looking to short this market soon. Okay, if you are a subscriber to my free newsletter, link in the description of this video, I'm going to tell you exactly how I am shorting the market. I'm going to give you a big clue here. I'm going to be using ticker SPY. I'm going to be buying puts against this or on SPY here. I will post the exact positions when I do it, and I don't know when. It's going to be soon though. A week or two or something. I will let you all know. So for my lions out here, if you're a lion, a trader, someone who wants to get in this market, just to see what I'm doing. I'm not telling you to follow what I'm doing, okay? Just understand that. I can't tell you what to do, nor can I guarantee an outcome. You understand? Okay, I've already gotten in trouble for this twice, all right? So I'm not going to let this happen the third time. So if you understand that I'm just posting what I am doing, and you can just to go play with it, look at it, frolic around, whatever you want to do. Okay, that's what I'm going to do. So link in the description of this video to my newsletter. It's 100% free. I would suggest you sign up for that or just subscribe to it. Anyway, with that said, let us move forward. So I just was writing down a few points here. Look for a pullback in this market relatively soon, okay? Look for an inflationary depression. Look for massive currency devaluation. They will not allow prices to fall in any meaningful way. Again, they're going to suck the purchasing power harder out of the currency central banks. Food inflation, food shortages, energy inflation, steep job losses moving forward. And, you know, this is something I wanted to touch on real quick. Greg Mannarino, wherever he may be, oh, that's me, has been explaining for a while, you need exposure to commodities. More and more people are coming out of the woodwork now saying the same thing. I don't know, it's even YouTubers, okay? A lot of people are writing to me, hey, Greg, this guy or this person I follow is saying the same things as you are. Okay, maybe they see the same things and maybe they follow my work, and I encourage people to do that here. But commodities are are a place that we're going to need to be moving forward, understanding that central banks, none more so than the Fed, are going to suck the purchasing power out of the currency faster as they consolidate the banking system, ready to roll out their new central bank digital currency. Understand? I'm telling you people, this is going to be a curse upon the world. But people are they're gonna submit. They're gonna submit as they always do, on their knees. Okay, not me and you. Okay, we're not gonna do that. We're gonna continue to try to raise awareness here, people. So that's where we're at right now. A lot of people talking about commodities here. Yeah, I think you need exposure to commodities. What are Greg Mannarino's two favorites? What's Gregory Mannarino's all-time favorite? Hey, you want me to let me show you? Okay, just so you have. This is Greg's favorite right here. They're on my eyeballs. See that? Silver? I think it's the most undervalued asset in the planet, people. I really, really do. And what do I base that on for you new people here? Look at the Dow gold ratio, gold silver ratio, and that should give you a big clue as to where this is going to go. Where's the bottom for the Dow? Nobody knows. All right. But I do believe at one point we're going to get par. We're going to get Dow, gold, 1-to-1. So if the bottom for the Dow is, just throw a number out here, is 6,000, you're talking about 6,000 gold for gold. And I think the silver gold ratio could potentially normalize to 10-to-1, at least 15-to-1. So just do the math. Just do the math, all right? We're in the right spots, you and me. We've been in the right spots. I've gone out of my way thousands and thousands of times to explain this to everyone as clear and as directly as I possibly can. With regard to commodities, people, you know what I've done for you already. I've done all the homework for you. In my free newsletter, again, link in the description of this video, I have outlined several times some exchange-traded funds that will give you exposure to commodities. You want to look for an ETF, or an exchange-traded fund that gives you exposure to a large basket of commodities here. All right, you know all this. It should make sense to you. If what I am saying makes sense to you, beautiful. If it doesn't, do your own research. Say, is what Greg's saying right? Think about it, ponder it, and then act. Okay, this is a channel for men and women of action, not for people that are going to sit back here and call crashes. Crash tomorrow. No, I do feel like the market's going to pull back, and I think it's going to pull back soon. We're going to take advantage of this, all right? All right, people, that's all. Please, please, please comment. Please, please share the video. And that thumbs up down here, it is valuable. Please, if you think I've covered something important here, share the video and give me a thumbs up. I will see all of you in the morning What else is there to say? Except this guy loves you a lot from the heart. We got each other's backs. All right. Without each other, we're just dead. All right. I'll see you in the morning.